It is Saturday, the 29th of September in Thailand, Saturday morning. Okay, so end of the week was very confusing for me. I didn't expect that big bounce back in the US dollar. This is the dollar index monthly chart. You can see that last month we spiked up to 96.98 in August, breaking above the 500 month moving average, which was a little bit confusing because we'd held it so well in the two previous months. So looking at this chart, I'm still feeling bearish. I'm still feeling negative about the dollar, despite this good bounce back at the end of last week, which I admit was unexpected. We managed to get up to 75.73, so we almost just kissed that 500 month moving average. And I think I'm still standing by this channel, which I think is a negative channel, which is just developing. So we're overbought on the monthly chart as well, just as a very small point. Okay, the weekly chart, what does that tell us? You'll remember that I did pick this high actually. I think almost to the well, certainly picked it to the right day, and so we did turn lower as I expected. And as I say, this baffled me on Thursday, Friday. So I'm trying to make sense of it. Right, the weekly chart shows us touching the 100-week moving average at 95.40. So that held. And then we've got the 200-week moving average a little bit higher up at 95.67. So this should be resistance, and it certainly did work initially in these months, June, July. This resistance did hold. We blipped above it, and then we formed this negative pattern, which is another reason why I got so bearish, and then headed lower. So there's every chance that this resistance area will hold, that 95.40, 95.65 area. There's every chance that that will hold again. If it doesn't, then I guess we test this trend line, but I don't really think that's going to happen. On the daily chart too, we are running into resistance. We've got a fairly minor trend line going back to June, but that held. We've got the 500-day moving average at 95.45. Of course, the 500-day, the 100-week usually coincide fairly closely. And even just above there, then we have got this little resistance area around 95.65, just from previous peaks, of course, which I've already shown you on the weekly chart, and I believe they held because of those weekly moving averages. But anyway, just pointing them out to you. We've even got a short-term 61.8 Fibonacci resistance at 95.77. So it's really only above 95.80 that I would consider the bulls are fully back in control of the US dollar. There's just a lot going on here. So I certainly do think it would be worth selling into any move between sort of 95.40, 95.60 with a stop above, say, 95.85. I'm going to stick with that negative outlook. Just looking at the 4-hour chart, we've managed to beat some resistance at 95.00. You'll remember 94.90, 95.00 is that big level on the way down, and we've managed to push above it. So there is a good reason to suggest that we can push into the 95.40, 95.60 resistance band in the very short term. The short-term charts are indicating that that is possible, and I think, yeah, as I say, we've got to try a short up there. So does the euro US dollar chart back up my theory that the dollar will eventually weaken? Again, big red candle last week, unexpected, but we do have some really good support down here. I think we can fall a little bit lower. I think we can retest the 100-week moving average down around the 115 area. We've got a trend line down here at 114.90. We've got some good price action support as well just below there, down as far as the 114.50 area. Looking back at the weekly chart, you can just see how this area here has worked in the past, down at 114.70, 114.40, 114.30. So there is a lot going on in that high to mid 114 area, and I think that should really act as a good support level. I don't see any reason why we can't test it. I do think in the short term we can go a little bit lower. Let's have a look at the daily chart. Okay, so unexpectedly back below the 100-day moving average on the daily chart. So there is a negative bias in the very short term, despite the bounce on Friday. If we hold below the sort of 116, 2015 area, that's a fib level. You can see on the chart as well, there's price action sort of backing up that level. Then we can head down and maybe retest the September lows, which we've got at 115.24. We've got a trend line down here as well at 115.11. We've got the 500-day moving average down here at 114.93 at the moment, just slowly climbing. We've got the 61.8 fib at 114.95, and we've got these lows down here at 115 area. 115. So look, 115.10, 114.95 looks like a really good support area. There isn't an awful lot to stop us coming down and testing that. And then I would be definitely trying along and seeing if we can resume what is a bull trend, at least over the last 2 months. Again, the short-term chart, the 4-hour chart, does give us good reason to believe that we will turn lower after this little bounce on Friday afternoon and head back towards, head down towards the September lows, which you can see. I'll put some trend lines on this one. Again, shows some decent support. Well, certainly in the low 15 area, but I wouldn't rule out a move to say 14.95, and we're going to be buying down there. There isn't really a pattern to go by, so I'm just having to go by previous price action, fibs, and anything else I can get. The trend lines, or the anyway, still unwinding that overbought situation. So by the time we get down to the 15 area or the high 114 area, we should be oversold as well. So we'll see what happens when we get there, but that's my best guess as to what's going to happen in this very, very, very difficult sideways market. I mean, it really is hard to read. Right, the Australian dollar versus the US dollar. Interesting to note, isn't it, how these the 200-month moving average and the 500-month moving averages, and even the 100-month moving average, have really had a significant impact on this market. So you mustn't forget to look at your monthly charts. Right. Looking at this monthly chart, we've got a trend line going back to 2008, a decent 10-year trend line, which has held. So on the month at least, this is a relatively bullish candle, or certainly not a negative candle. So it is indicating that the market is respecting this 10-year trend line. And let's move to the weekly chart. Okay, so we have bounced nicely off that 10-year trend line, but we still remain in a bear trend. I think there's nothing else we can take from that other than the fact that we were trying to recover from an oversold situation. But for those reasons, yeah, the market looks bullish despite last week's pullback. The daily chart is not talking to me. We're just easing the overbought situation. So hopefully, or probably, this is just easing the overbought situation, and then eventually we'll turn higher. But obviously we've got to get up through sort of 93.00. We're going to meet a much more challenging resistance level at the 73.30 level. That will be the big one to beat. And then obviously we've got to get up through the 100-day moving average, but worry about that next week if we actually manage to approach that area. First, we're going to have to get up through 92.70, 92.80. I'm just going to show you now the 4-hour chart, which is showing us just hovering between the 200 and the 100 period moving averages. So I don't know whether, if you're a scalper, it looks like scalping between 72.35.40 and 72.00. Well, that's working at the moment, isn't it? So yeah, I still am leaning towards a bullish scenario for the Aussie dollar going forward. The New Zealand dollar doesn't look as positive. We're holding below 67.20, which is a significant 23.6% fib level, and we've got this trend line going back not quite a year and a half. So we've got to have to beat 67.20 for this outlook to turn positive. On the daily chart, if we can hold 65.90, remember I did have a buy area in that low 66 area, and actually the buy area in the Aussie also did hold. We had those levels on Thursday. I didn't repeat them on Friday because I was confused, as you know. But anyway, if we hold 65.90, then that can act as a platform for us to push higher. And then the big question is, what do we do here? It would be worth a short here at 67.10, 67.20 is a big resistance level, but you've got to be prepared to then reverse on a break higher, and then we should quickly tackle the 100-day moving average. If we get above there, it's going to be a much more positive outlook. Dollar yen. So despite the relative weakness of the dollar over the past couple of months, the dollar has been pushing higher against the yen. So that's something that we often see when the dollar's weaker against other currencies. On the weekly chart, we've got the dollar pushing up through the very important resistance, which I really thought would hold around the 113.15.25 area, but I was wrong. So as you know, we have to that was the buy signal, and we certainly have pushed higher. If you were nimble enough to get out of the short and into a long, then you're making some money back from the short, which didn't work. But we're going to run into some resistance now. Hang on a sec. Okay, so we have got a longer term Fibonacci resistance at 113.98. This is where the resistance starts. But you can see on the chart that we could push a little bit up through there, maybe get up to 1450, 1470. We've got, just from these candles you can see on the weekly chart, that go up to 114.49, 114.36. There's quite a lot going on in that low 114 area. So we should tackle 114.00, and then we start to run into trouble. Then it's going to start to get a little bit dangerous to run long positions. And I think we can think about a short position here. Having said that, I've just spotted this little trend line. No, I'm going to take it off. I don't think that's going to be too relevant. Well, you can see the trend line, how we've hit it and stopped, but I'm actually going to take it off. I don't think that's particularly relevant. I'm going to leave that and see if we can push up through 114.00 and get into that 114.25.50 area, which I think would be a better sell. And then it's a relatively low risk trade because you're stopping yourself out above 114.80. So, yep, I think that's the one to go for.